If you missed Nvidia, there are other semi stocks that are worth getting into. Nvidia is highly overextended at this point. I'm not saying it can't go up more. I'm not saying that AMD is not the new Nvidia. I'm just saying there are three other stocks related to Nvidia, related to AMD. I'll give you the tickers right now. AEVA on a bounce, RMBS, and COMM. The latter two, which both just had earnings, which could be the next Nvidia in terms of growth opportunity in the next few months. So let's take a look at these stocks right now. Starting with AEVA. They're all the way down here. They did post revenue down here. It wasn't great. You can see that the reaction was actually bad, but the reason we're buying it is a little bit obvious here. It went up a ton and it came down a ton. And if that sounds stupid, well, simple does sound stupid sometimes. It did bottom here, and fact is this could go all the way back up to 20 from here. So I'm not saying that you should just be buying these random LiDAR stocks, these sort of sensor stocks that are not Tesla, but there could be a real bounce opportunity here if this actually shapes up. They did have 175% year-over-year revenue growth in Q2. So, it's rough when a stock is down so much, but at the same time, when these results come out and they seem somewhat reasonable, you have to think this thing is going to turn up at some point. And when it does turn up, are you going to be there when it goes up? Their operating loss was $25 million, but it's actually a 20% narrowing loss compared to last year. And they ended the quarter with $50 million in cash. So they do have an $80 million strategic investment from LG Innotek. You probably heard of LG, like the phones. And they're going to scale their LiDAR tech across automotive and industrial infrastructure. So not just sensors for full self-driving. It's not like this company is just either gets a collaboration with Tesla, gets a collaboration with, Waymo, or it's dead. It has another sector, infrastructure, and large-scale manufacturing that its sensors can be used in. Think like Amazon, manufacturing facilities, shipping facilities, stuff like that. So all this mixes together to give real bounce potential, given that it's down so much. So it's not like we're looking for blowout earnings or anything here. The fact is they had some revenue, $5 million in Q2. It doesn't sound like a lot, but again, $80 million strategic investment from LG. Their expectations were only around $3 million for revenue. So this is sort of an under radar bounce play, and the intraday volume is sufficient enough where if you have less than a $10 million account, this could be the play for you. Now, if you have more than a $10 million account, don't worry. There are some stocks that are also setting up for you here. You can see Rambus trades about $2 million a day. And it recently had earnings, 170 million revenue, so much more than AEVA. And this was up 30% year over year in revenue, topping the 170 million guidance. Product revenue hit 80 million, and they generated 90 million of operating cash flow. Product revenue was up 40% year over year. Structurally, the stock looks pretty good. It's up a lot from April, about 80% over its all-time highs from, February. If we look way back, the all-time highs are actually back in 2023. But it's finally getting near these blue skies. If it breaks out above 76, this could be really exciting. Looks like it's sort of consolidating right there again after it gave a shot. So there's a lot of opportunity here on this high volume earnings day where it held up. This is a very unusual stock that held up during this earnings season. And if it holds above this high volume close around 73, which it does look to be doing, this could get super enticing. Now, the volume's small, but if you want to put your money in a stock that has positive earnings rather than AEVA, which it's been down so much, this could be the play for you. And, fundamentally, there's momentum in data centers and AI, of course. DDR5 memory interface chips are used, and Rambus provides materials that bubble all the way up to the open AIs and the companies that are just eating up all this data center growth. So they have cash. Earnings that are at 50 cents, a little above a share, slightly below the forecast. But stock still popped in after hours. I think this forecast that Thinkorswim is showing is maybe an estimate of a different combination of investment banks. So look, it's up. It hung up here. This is extremely rare in this earnings season where we have stocks like Roblox, which I'm currently short, stocks like SoFi, which sold off, and even, on earnings, they sold off immediately. Look at this wick. It's absolutely incredible. This is about 17%. Then, of course, you had the stock that just went down on earnings and kept going down, like TTD or Netflix. So the fact that this is holding up is relatively rare on this earnings season. August is generally slow and people are, going sailing or whatever. Rambus is a good play. RMBS, Rambus. Now, the last stock, COMM, is also holding up over earnings. Net sales of over $1 billion, 32% year-over-year growth, adjusted EBITDA of $340 million, 80% increase there, and EBITDA margins of 24%. So those are all great numbers, and we're seeing it reflected in the movement of the stock with this earnings that went up a lot. This is up 80% on earnings day, and it's holding up. So they're going to be sitting on cash. They do plan to distribute a dividend, and it's getting repriced for that reason. They do have the sale of part of their business for $10 billion in cash. It's their CCS business to Amphenol that they're selling. And I don't know that this sale is going to be a super game-changing event for the stock price. I'm sure it's priced in. But the fact is it's going to close in 2026, first half. It is a positive catalyst. In September to December tends to be the best months in the stock market, and it will enable the company to pay off its debt. So Bank of America is positive on it. This is a huge investment bank. Obviously, Bank of America, we all know. I actually use Bank of America. So they think that their remaining segments that they're still going to have are going to grow 10% annually over the next 2 years, 9%. So the sale is, accretive. They're going to get some cash, pay off some debt, and they're still going to have business segments that are growing profitable. And this earnings reaction looks excellent. It's up a ton. Obviously, went from 5 to 20 almost, but it's a low price stock, room for growth, positive earnings. You could set a stop, so it's a low risk entry with a high reward. You just can't say that about stocks like Nvidia, which are also up a ton. And, maybe it'll go over this all-time high, but this also might mark the top for a bit. Depends on how these earnings are going to shake out at the end of the month. But with all that said, AEVA, COMM, and Rambus for, mid-size account over Nvidia, I would say. If there's a ticker that you're looking at, drop it down below. If you want this channel to attract more viewers, so I in turn produce more what are essentially disclaimer, not financial advice, but they are stock picks that I've picked. Go ahead and subscribe. It'll make the channel look like it's growing, which it is, but I only see that in the watch time. All right, I'll see you in the next one. You guys are awesome.